Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. Apologies for the lack of videos over the last few weeks. I've just been kind of a bit busy with other stuff, taking a little bit of a break just from things, just generally chilling, doing more training, doing more exercising, doing more gym, all that fun stuff, other than crypto, the market stuff, just having a little break. But yeah, but I think I'm just gonna carry on doing the daily videos again now, because obviously a lot of you guys, like a number of people, not a lot of you, a number of people have just said, oh, what's up with the videos? So we'll just start them back up again. We'll start the daily ones back up. So yeah, there we go. So yeah, with all that being said, we shall go straight over to those Bitcoin for our chart. So yes, as you can see, not a lot going on other than we have got back above at the present time above this pretty important resistance area. As to whether we can hold above here, whether we break below, put in a lower high relative to these highs here, and then come and take out this low, then come back down to 17 and potentially 16.5. I guess it will depend on the overall sentiment of just finance 1.0 markets, and just are we going for a risk on or risk off week or next leg. If we can get above these highs though, then yeah, clearly we'll open up 23 and a half, and then yeah, that will be a big test. If we get back above here, we could be looking at a major bounce that could ultimately end up with this being the low. I know not a lot of people are expecting this to be the low, but that is markets will bottom when a lot of people don't expect it to be the low. I do remember the lows, not the pandemic lows, the ones before that, when we dumped all the way down towards basically just into the 3Ks, and yeah, Tone Vase and the likes are all calling for down to like 1400 BTC, but that ultimately was the low where we already put it in basically, and then kind of rallied off there and went on another massive bull run. So again, it could be similar. Everyone's looking for lower, but we don't get that. Don't forget, there is a lot of interest in this asset. There is still lots of liquidity in the world. There are problems with other currencies and their viabilities, and then yeah, like even if it's just a 1% allocation from an increasing amount of the world's very wealthy people, it certainly gives a bid to hold us in and around this area, and then ultimately pushes on once the Fed ultimately starts easing, which we know everything goes in cycles anyway, so it will. It just depends how high it can get first before it then has to start doing some crazy stuff. But obviously they are hiding behind the apparent good jobs numbers now. That's all they've really got going for them now, and I think they are gonna quickly reverse. The jobs number, just like CPI, just like any other statistic, is a massively manipulated model view via the birth rate, the birth death assumptions, the assumptions obviously of the GDP, which is another manipulated number, and then also taking people out of the statistics, and yeah, and so if you do look at the labor force participation rate, you see that's at near lows, and not looking good at all. So yeah, the jobs numbers are massively manipulated, and the Fed will be aware of the fact that the jobs market is maybe not as good. The consumer is not in as good shape as they like to pretend whilst they're trying to increase rates. But yes, ultimately there's going to be an inflection point, and then the Fed is going to have to quickly reverse, and that reversal point that was predicted to be out deep into 2023-2024 is coming, is moving in, is coming in basically to sooner and sooner where we expect a Fed pivot. So yeah, let's look at some other markets. So the S&P, as you can see, still managed to hold this very important level. This is a really important level. I mean, if the finance 1.0 system is as vulnerable as it looks, this has to kind of be a level that they need to try and manipulate to maintain, because once we go lower than here, it's gonna cause like cascading liquidations and sellings and redemptions and all sorts of fun stuff, and we're gonna quickly see moves down, and then things are gonna quickly turn. The dollar index also, as we can see, at a very well, an important level, at a level where it could very easily just take another leg up, put a massive squeeze on the market. But what I will say is we have got a potential ascending wedge, and ascending wedges are potentially lots of potentials there. Everything is if buts and maybes. Bearish formation. So if you do break out the bottom of this, yep, down. If we do break out the top though, yep, up, onwards and upwards. Onwards and upwards. But yeah, rising wedge. Or if you want to look at it a different way, if you are bullish, if you have that inclination, you could just look at it as a very aggressive bull flag that is working its way up even whilst it's flagging out. But yeah, potentially running out of steam here. So we'll have to see what happens with that. The Bitcoin dominance, though, interestingly, not as high as you'd expect given the conditions. I mean, if we do look at this whole area we're in, we're actually practically just below the midpoint of this sideways range. So yeah, to see that with obviously the crypto market getting whacked is very interesting. I do think that people are potentially coming around to the fact that Bitcoin is not the one, is not the future. Ethereum, especially when it goes proof of stake, I mean, the world isn't necessarily rational, and you may look to Bitcoin's decentralizations and proof of work and all that stuff, and you just get BTC maxes. But Ethereum is just by far the superior asset, and narratives and all that aside, if we just look at the narrative, it will go proof of stake, whilst the Bitcoin is proof of work, and that is going to be a massive difference. There will be all sorts of campaigns to get that message out to people that are of the impression that crypto is a massive waste of energy, and we have an energy crisis practically at the moment. So Ethereum really could be a big massive winner going forwards. That is my personal opinion anyway. It's obviously massively useful. It's continuously getting upgraded. It's obviously got layer 2s. It's going to have sharding, then it's going to have all that other fun stuff that is coming relatively quickly, and it is going to be we are early. We are literally early into basically the beginning of the world computer. I mean, we had I personally think, obviously, after the internet, the most important thing to come into existence is the Ethereum world computer, which is in its infancy stages. It has got lots of issues that it is that its roadmap is ultimately gonna deal with, and it's just gonna be a massive driver of wealth for people involved going forwards, and yeah, all that other fun stuff. Gold actually did come back down into an important support level, almost wicked into it, but yeah, not a good looking chart at all. But if it can hold this important level, similarly with the stock market, if it can hold the important level, similarly with Bitcoin, if it can hold its important level and turn back up, then obviously that's good. But yeah, whilst you are testing the lows, obviously there's always the clear and present danger of breaking to those lows. So yes, there's that there. Oil easing off a little bit. I think yeah, I mean, we are in a difficult environment, what will potentially be a deflationary environment. It is going to be difficult to see this go up. I know people talk about demand destruction, and it is obviously a thing, and the demand destruction, they're talking about it happening at higher oil prices. But however, if the consumer has less money, the same equivalent oil price equals a higher relative price because of how they have less money. So maybe they're looking at demand destruction at $200. However, if the consumer is getting whacked because we're in a recession, stroke depression or whatever, then yeah, that relative $200 level comes down a lot lower, and demand destruction kicks in a lot earlier, and there clearly is demand destruction already for this. People are just doing their last bit of spending their savings, just to have that last bit of enjoyment before what they potentially see as a winter coming. Not obviously literally, I just mean a financial winter where we have a recession, potentially depression, bad times, geopolitical instability, potential food crisis, lots of drama on the cards, where it is not an environment where the Fed will be aggressively raising rates. The Fed is almost definitely aggressively raising rates now because it needs to get in what it can to then have to then dump those rates back down, and it obviously doesn't want to go negative. That will signal, yeah, negative didn't work for Europe, it won't work for the US. It will basically be the end of fiat, yeah, and be great for crypto. So that is kind of like what a lot of us must see as a potential risk here, which is why we are involved in crypto. So let's pull this along here. The Ethereum USD pairing does need to get back above this recent high around 1300. If it does that, this could start to look good. Ultimately, above here would start to look extremely good for I mean, I guess will be a rally into the merge and beyond, taking us up towards 6,000. That is my guess. It is a big call. Ethereum isn't going away. It is the world computer. It is practically, well, it is the most used crypto. It's fee generation. It's massive. It generates income. It is currently getting priced as a highly speculative risk asset. It has lots of frothy money in it. It has money from people, retail people that are getting squeezed, but it is gonna shine through as an asset class to rival bonds ultimately, with its yield, with its use, with its income, and it is gonna go nuts. So there we go. We all know this. It is just the path we take to that ultimate destination. So yeah, I think I've talked a bit vaguely about lots of things there. So let's have a look at some stochastics. Can we hold above here? Can we continue higher? Are some higher time frames starting to help us out? 4 hour, again, a bit extended here, but 4 hours not really the one that we need to look at for this kind of move. Or at least holding above this resistance, above 20k. 10 hour got plenty of support from the 10 hour though. I assume we're gonna have plenty of support. I guess it will be about down here when it decides to load. Plenty of support from the 12 hour, plenty of room to run there. Daily did turn back down, trying to reject the bullish control zone, but if it does turn back up, take out this high, then yeah, daily will be looking very good also. Buy daily not looking too good, but low. 3-day not looking bad actually. 3-day turning up from a low level. 5-day still pointing down but at a low level. Weekly pointing down but at a low level, but losing obviously that downward curvature. So yeah, I mean, we could be in for a big bounce here over the next few weeks if this turns up and gets going. Bi-weekly very low also. This could turn up as well, and then we will have some very good looking stochastics in a few weeks if these do start to turn up and we do start to get some momentum to the upside. I mean, dare I say it could signal the fact that we put a bottom in. That is not to say that we just go straight up to all-time highs. We could then get a very severe pullback, but not take out these lows, put in a nice higher low, which ultimately would be the thing that I guess the biggest traders will be looking at. That will be looking at that higher low to basically pile in and drive us onwards and upwards to new all-time highs. So yeah, lots more videos coming. I have been looking at some other sort of stuff to do videos on, just general kind of mindset stuff, because yeah, I mean, the world is going to be a tough place going forwards. We are hitting that sort of Neil Howe's fourth turning sort of environment where times are going to get hard. The old ways are not necessarily gonna work as well. So yes, we shall do some more videos on some fun stuff like that. So yeah, thanks for listening, guys. Remember, this is not financial advice. I'm not a financial advisor. Glad to be back. We'll be back here every day again. Thank you for listening, and I shall speak to you guys soon.